There's actually something about DXY bias that I'd like to show you, it's really cool. Basically, when you open up your chart for Euro USD or GBP USD, potentially even gold, understanding the bias means that you've got to find a correlation with the DXY as well. Because if the DXY is bullish and you think that USD is bearish, then you've got a problem. Price is probably just going to consolidate. You need them both to be on the same side. So when you're checking the US dollar index for its bias, there's something really key to know, and that's that price on the 15-minute chart is always extremely keen to go to the place where the tops of the candles are the cleanest. So I'll explain what I mean by that. So when you've got here, this isn't the same as your clean candles on a chart. It's nothing like that. You've got your price, so you've got a dip there, another dip there, and another dip there. So the problem with this is that that's manufactured resistance on the way down. Now it's very hard for price to get past that without a big news event. And also if we were to pull up over here as well, it's just manufactured resistance. There's higher lows, higher lows, higher lows. Whereas when you've got this happening on this side, you've got all of these highs that are pretty much sort of in the same area like that. It's like 1, 2, 3, 4, and then just above that, these as well. These are all sort of just added extra highs, 1, 2, 3, 4. Even over here, these are quite close in proximity. You could say that's, 1 high, 2 high. That's what I mean by clean tops, where they're almost double tops. They're very close together. From the top of this candle to the top of this candle is only like 3 pips. The top of this candle here to this candle is exactly the same. These ones are less than a pip away. And so what price does in this instance is as soon as the session opens, it'll start gunning it. It'll start gunning it and going directly towards that to sweep out that liquidity. And you'll see, because we've got 2 areas of clean sort of liquidity that price wants to take out, it'll go through the first, do a bit of a retrace, and go through the second. And you'll see this time and time and time again on the charts. Like if you look at these two here are very, very close in proximity, right? So price comes down and then it pushes up through them. This is the same cycle on repeat over and over and over and over again. So if we're looking over here, right, you've got this lower high, another lower high here, right? Price doesn't want to go there. Price wants to go past here, where you've got 1, 2, 3, 4, 5, 6 taps into that low. These are all very equal in their distribution. So when the session opens, bang, it smacks down through it. That's the liquidity that's being targeted. And that's how you can get your bias on the DXY when the London session opens. And if we look at this big move from CPI, even in the New York session, right? You've got what happened right before the session is you had all of these lows touching into the same area, and then you had all these highs touching into the same area. This is classic of what happens at a news event. They manufacture this in so that they can take liquidity on both sides of the market. So you can see they come and they smack down through this liquidity, these clean lows, and then they push up through the clean highs here. It's the same cycle on repeat 24/7. And if we're going to look at what happened yesterday, even the reason I was bearish on this was because we had all of these clean cut sort of areas in through here. Look, you've got this inverse fair value gap as well up through here, which acted as a support earlier in the day, and then this fair value gap as well. And I drew that all the way through, right? Because on the 15-minute chart, we didn't really have clean highs to the left-hand side. And so I was expecting price to move up into the left-hand side, only to push down through these clean lows. Look, 1, 2, and 3. And then underneath that, you've got 1 and 2 there, only within a couple pips of each other, less than a couple pips of each other, these lows. It's a no-brainer when you see this sort of price action. Whereas on the other end, right, you're just making there 1, 2, 3. They aren't all in a couple pips of each other. They're not clean highs, which is why price just went past them, came into our inverse fair value gap over here, and then it shot all the way down to take out the manufactured and liquidity here and the liquidity over here. And you'll see even coming into the US session as well, that you had all of these sort of clean levels through here, these two clean levels here, US session opened and took them out and went down. It's the same cycle on repeat. Look for those clean lows where you've got lots of candles or candle wicks touching sort of the same area, or those clean highs where you've got a lot of candle wicks touching the same sort of high area within a couple pips of each other. Price wants to go through that. It wants to target that because that's where all the stop losses are. That's where all the liquidity is. It's really just as simple as that, and it's mind-blowing when you see it. Let's see if we can just channel back for one more. Okay, I've probably showed that one already. Okay, let's take a look. Take a look over here. So you've got 1 and 2. There you go. Look at that. Beautiful clean lows. You've got 1 down there, 2 through there. And look what happens. Price goes right through it, comes up, tests into a sort of a range, the inverse fee value gap over here, like that. Price goes, taps the low. You've got 2 taps into that. And then immediately at the session open at New York, boom, through that, targets that liquidity, goes up, and then shoots all the way down. And you'll see that it's the exact same stuff on repeat. You've got this manufactured high here, 2 clean candles. You got this manufactured low here, 2 clean candles. What is price gonna do? Let's take a look. So London session opens, it goes through there, both. So it's also time and price, right? So that's the London session open candle, which means that it's already taken out this liquidity. What's it gonna do next? It creates a bit of resistance, and of course price is gonna power through it. It's so simple, every single time on repeat. Every single time on repeat. And here, this is also a great example. You've got those 2 clean candles there. Super simple. Price comes in, session opens, it makes some retracement, and then it powers through that. That is your bias. You want to target those clean candles. Also over here, a whole bunch of highs all together, and then even at the lower point, a whole bunch of highs all together. This is your next target. So of course, when price comes down through and back into this range, there you go. You can target that high there. You'd find an entry pattern and probably have a stop loss, something like that. Same thing on repeat. Price, when the session begins, will want to target the clean candles.